But Sandhya, hi, morning. Great to have you on the show. Thank you so much for taking the time out and joining in today. Just walk us through how the quarter gone by really has been for you, because what one sees is that there wasn't much of a margin expansion, or at least a little lower than what the street was anticipating.
Good morning. Thank you for having me here. This Q4 quarter comes on a base of Q4 FY23, which was a phenomenal quarter for most of healthcare, given that there was a lot of post-COVID rush that was still coming through. So therefore, from a revenue point of view, the quarter-on-quarter looks slightly muted when compared to the previous quarters that we've been seeing. But in general, the way we have seen the throughput in our hospitals and the way we've been able to deliver our services, I think we are broadly happy with the way our revenue has come through. From a margin point of view, I think we have seen a very positive turnaround. So if you see the NH group margin for Q4 of FY23, we were 23.8%. We have expanded it to almost 24.9%. For the full year, our margin is 24.5%, vis-a-vis 22.8%, the same for FY23. So I think we have been able to expand well on margins. That's coming on the basis of a few things. One is our continued work on efficiency and throughput, which we have always spoken about. We have seen meaningful improvements in our realizations without taking any impactful price increases. Now that's coming, one, because of the mix, both payer as well as specialty mix, we have been able to improve. And also we've been able to do more with less, as we've always said, and that's also helped us. So I think the margin story is still very strong. The growth story is okay.
Right. Sandhya, I can see in your presentation, you've actually given a very good breakup of on your CapEx plan, both India and Cayman. Talk to us where bulk of this CapEx will actually be going towards, and will it also lead to operating leverage coming in?
Sure. So one part of the CapEx, of course, goes into the regular replacement, upgrade, new equipments which we keep buying. And there is, as you are aware, we were building a large hospital in Cayman. It was $100 million commitment. It's almost done. There is the end expenditure, the last bit to close on that. So there is a part of the CapEx, about 250 crores will go into that. The rest of it is all about future expansion. And the way we are looking at expansion, largely we are looking at buying land or using our existing land, that land bank we have bought, and constructing. So these are more long-term investments in nature. These will not deliver operating leverage per se in the current financials, but it will create more sustainable capacity for us when these hospitals come up. Just in terms of operating leverage, I would like to add that there is a lot of work that we do on the throughput and the efficiency side. That's what gives us more cost leverage on fixed costs and being able to deliver a healthy return.
All right, morning. And I also wanted to understand a little bit about the outlook when it comes to the cumulative, what the traction is on the recently commissioned radiation oncology block at Cayman. What is the quarterly run rate when it comes to sales here?
Yes, the radiation oncology block is doing really well. We have not split out that number and shared, and therefore, from an overall group point of view, that number per se, I don't know whether it is as significant, but it is doing way above plan. The good part is that the people of the island who were leaving the island for these services are now staying behind and are availing this service from us. And that's really the big positive on the radiation block. It's doing quite well.
Sandhya, on a more strategic, because you handle numbers, for the group, on a more strategic level, are you witnessing, a scenario right now where people's cost, including doctors, etc., of course, is kind of in a very narrow range with a cap on it, and as volumes for your group look upward with, of course, higher facilities and more numbers and beds, etc., there is a strategic shift possible in the next 2-3 years to when your margins move to a higher band. Is that a kind of a scenario which can play out?
So there are two aspects to this. One is that there is a certain cost inflation that is coming across the cost lines, not just the wage cost line, but consumption cost line, capex cost line. And therefore, the fixed cost leverage, as one may say, it is not coming so heavily from the cost line as one would expect to flow through, because the inflation pressure is still very, very high. Now, the second aspect of this is that as Narayana, we also don't pass on the cost of inflation to our prices. So, which means we try to absorb a lot of the cost increase within our efficiencies. And therefore, some of the leverage that could have flown through, it doesn't flow through because our pricing, we want to keep it affordable. Now, having said that, the real lever for being able to create that point of inflection in terms of cost is not actually fixed cost, but technology. Technology will be a phenomenal differentiator over the next 3 to 5 years horizon, both on the operating side, how patients are handled. Healthcare is a very manpower intensive industry, and a lot of people are involved in serving one patient. So there is a certain flow and convenience and ease of and scalability that technology will bring. And on the clinical side, with better EMR and better and more robust AI-driven predictive tools, I think we will also be able to work in the efficiency of patient turnaround on the clinical outcomes. So therefore, that is going to be the point of inflection and not really manpower cost per se.
Right. So Sandhya, what percentage of your cumulative capex would go into R&D, would go into expansion, and then technology, which you said is going to be the bigger game changer?
Yes. So I think we have guided about 1,700 crores of capex. Now, roughly 30% of that would go into the Cayman completion and our routine capex, which is new equipment, replacement of existing equipment, whatever I had spoken about. The rest of it would go into expansion and into technology.
Sandhya, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.